I think in the end it's a lot about personal chemistry as well, because whoever you choose as your investor, you'll most likely work together with them very, very closely for many years. So I think that personal relationship is ultimately maybe the most important factor.
Hey everyone, welcome back to the SaaS Revolution Show, brought to you by SaaStock, the conference that helps SaaS companies get traction, growth and scale. I'm your host Alex Theuma, and I'll be looking at what it really takes to build and grow a SaaS company today, and how founders and entrepreneurs stay healthy on the journey. Now on with the show.
Everybody, thanks for joining us, and welcome to the SaaS Revolution Show. Christoph Janz. Great to have you on the podcast for the first time, and actually we're doing it live at SaaStock 2022. So a double whammy, great to have you with us.
Thanks so much, Alex, for having me. It's great to be back at SaaStock, finally, after 3 years of Corona break.
Yeah, exactly, three years, it's pretty crazy. I don't know, I'm not sure if time has flown, I don't think it probably has, but 2019 also doesn't seem that far away that we were here at the RDS in Dublin. So Christoph, for those that are here live, and also the audience that'll listen and subscribe to the podcast, tell us a little bit about who are you as a person? Who is Christoph Janz?
Of course, yeah. I'm Christoph Janz. I'm one of the founding partners at Point9. Point9 is an early stage venture capital firm focused on SaaS for the last 10 years, or actually a bit more. I've been an angel investor for a couple of years before starting Point9, so I've been investing in B2B SaaS since 2008. I started 2 consumer internet companies in the 15 or so years before that, and some software/hardware, software development and distribution businesses, or tiny companies before that, in the last century, when really there was no internet yet. And since you asked who I am as a person, what else should I say? I have three boys. They keep me busy when I'm not thinking about SaaS.
Very cool, very cool. How often are you not thinking about SaaS? Are you thinking about it all the time?
I think I probably got better at not thinking about business all the time, which is not something I was good at while I was running my startup, where it's pretty much a 24/7 job. At least it's hard to really get it out of your mind. I think I got better at it over the years as I became a father, and you think about that what matters in life. I mean, I probably think about SaaS related questions when I'm under the shower, and then sometimes produces good ideas. But I think I've learned a bit more over the years how to not think about business all the time, but also have good time with kids and family.
And you've been to all the SaaStocks. Do you have a favorite? And if so, what was it and why?
Yeah, it's a really difficult question. I don't know if I could pick a favorite. I would say maybe the very first one, because SaaStock was really the first major conference bringing SaaS fans, investors, founders together in Europe. So I think that was a very special one, but I really enjoyed each and every one, because each one was kind of bigger and maybe even better than the previous one. I think this one today is also very special because it's the first one after 3 years of having no SaaStock. So I'm really glad to be back in Dublin, and as much as I enjoyed participating in some of the virtual conferences that you did, or that you set up during the Corona pandemic, it's just very different to be back in Dublin and meet people in person.
Yeah, I think definitely. Also for me, the first SaaStock, of course, has a special place in my heart. It was a great event for many reasons. And then I think this one, what we're seeing, and certainly on social media, but speaking to everybody that's here, is I feel like we've got a special year with the triple whammy effect of being back in Dublin for the first time for many people, back in person and back at SaaStock, and that's really just kind of magnifying everybody's positivity towards the conference. So that's really great. Yeah. It's Point9 Capital. I know who you guys are, but for those listening, Like, what is Point 9 Capital? What does it do? Who do you invest in? What sort of SaaS companies?
Yeah, sure. So we're focused on early stage, which we think about as really the entire seed phase. Anything from what you might want to call pre-seed or seed to late seed, or maybe early Series A or pre-Series A. So that entire phase before a company is ready to go out for a Series A. We typically invest between, let's say, 1.5 and 2.5 or 3 million. It's grown over the years. Like when we started out about 10 years ago, everything has been much smaller, especially in Europe, which is our home market. So we've sort of matured with that market, but we're still very much focused on the seed phase. We are a very concentrated, high conviction investor. We don't invest in a huge number of companies. We invest in about 10 to 12 companies across an investment team of 6 people, and including 4 partners. So we don't have what some people call like a spray and pray approach. Like we take every investment very serious and work very closely with each and every single company and try whatever we can to increase the chances of success. We also invest in B2B marketplaces. Some of my colleagues have a lot of experience with B2B marketplaces. We're also looking at some crypto-related investments, developer tools, APIs, companies using AI. But I think what's the common pattern across all of them is that it's B2B and that it's early.
You invested in Zendesk like very early. Is that still your best investment, or certainly one that you're really well known for? Is there another Zendesk in the portfolio that you should
I think with regards to for Zendesk, you probably have the highest amount of clarity that because it's a public company and it's about to be taken private, but it used to be a public company, so you can look up the value, whereas the somewhat earlier stage companies that are not publicly listed yet, you have like less clarity or less transparency if you as somebody asking that question wants to know like what's the value of this company. But we're pretty confident that there are some companies in our portfolio that are on a similar track and will eventually be as big as, or maybe even bigger than Zendesk, like companies like Chainalysis or Contentful, Algolia, Loom, Typeform. So there are a number of companies that I think follow a similar trajectory.
And also, a lot of VCs that we speak to, and even like over dinner last night, they focus in a specific kind of geo area, like Latin America or the Baltics or whatever. But you invest globally. Like, why is that? And is that challenging? Any regrets in being a global VC?
Yeah. So that's really been part of our, I don't know, maybe DNA or just the way we think about things really from day one. When Pavel and I teamed up, we were in different places. So we've started as a remote VC, and some of the first investments that we did were in places like Denmark or Scotland or even New Zealand and Canada and the US. So we always thought that it's more important to focus on certain types of companies, like certain business models or technologies, because these companies have more affinity with each other than companies that are close to each other geographically. If we had told ourselves to focus only on German companies, we would have invested in probably a lot of e-commerce, consumer, B2B and other things, but I think then we wouldn't have developed that much deep expertise in SaaS. So I think it served us well to be very focused on B2B and the seed stage, but very open in terms of where those companies start.
What are a couple of lessons that you can share as a businessman? P9 is your, Point 9 Capital is your business. What can you share in terms of learning, growing that business, with the audience? Some lessons that will be transferable to both founders and investors.
I mean, venture capital is a very particular business. So I think maybe the learnings for us as a VC are not that relevant for a startup, mainly because as a startup, you most likely want to grow as fast as you humanly can, because it's you try to get to industrialize something and scale, and then ultimately be a market leader and benefit from the economies of scale and the winner takes all effects that you have as a technology company. I think venture capital is not like that. It's sort of famously unscalable, although there are some players like Andreessen Horowitz and maybe Sequoia or Inside Ventures who probably managed to make it somewhat scalable, but the way we look at it, we don't think it's really scalable because it's so much a people business. So we don't have the intention to raise more and more bigger and bigger funds, have more and more people, because then that would mean that we basically would no longer do the real job, which is to find companies and work with them, because then we would spend most of our time managing Point9. And so we're trying to spend as little time as possible managing Point9 or ourselves or each other, which is why we have an equal partnership, which is like 4 out of the 6 people in the investment team, because that has kind of like that brings with it a lot of benefits, including like the least amount of managing. And so all of this is probably not that relevant for SaaS, for SaaS founders.
Well, let's talk about raising seed capital then. And so what would it take for somebody that's raising seed to get an investment from Point9? What is it that you're looking for, and are kind of the prerequisites, the must-haves?
So like most investors, we are looking for companies that can become very, very big. And then again, that's part of this very special business model that you have as a VC, which may not be the right choice or may not be compatible with the plans of many companies. So I think that's just something as a founder you have to be really aware of, that if you go down that path of raising venture capital, you should only do it if you are convinced that you really want to build a company that's going to be worth a couple of $1 billion. Otherwise, it's probably not the right path for you. So we are looking for companies and founders that have that ambition. And obviously, when we talk to them at the seed stage, like that $1 billion ambition might be more of a dream. It's probably a decade at least away, but at least we want to see that commitment, and that ambition. And in addition to that, we're trying to find founders that we think have a very special, maybe almost unique insight into a certain problem, as well as the ability to solve that problem, because most markets have become very, very competitive. So unless there is some special circumstance or expertise that led to the creation of that company, you usually have a lot of competition very quickly. So we're always trying to find that insight. We're increasingly also asking ourselves the famous why now question, because SaaS has been around for, depending on when you count, like let's say 15 years. So a lot of things have been done already. So when we see a kind of like a new version of something, we ask ourselves what is really the thing that is 10x better than the previous generation. And then we usually look for small signs of validation. Like we have also invested at a pre-seed stage when there was very little, if anything, in terms of validation. But at the seed stage, we look for like some validation, which might come from some users, maybe some customers or some pilots. So we're looking for these little signs that tell us that there is actually a market and that there is a problem experienced by customers, and this looks like a good solution to that problem.
And what's the best way for a founder to I guess get in front of you, get your attention, but also I guess be on Point9 in general, like investors at the seed stage?
So we try to look at everything that comes our way, whether that's an introduction from somebody in our network that we know, or if it's just a cold email sent to me or one of my partners, or if somebody submits the type form on our website. So we try to look at all of this. Obviously, it's a lot, and in many cases, maybe most cases, we have to decide very quickly and unfortunately quite superficially if we want to spend more time with this company. So my recommendation would be just to try to be really concise and tell us in a couple of sentences and maybe in a nice short deck, like why this makes sense and why we should look at this. I think then there's a good chance that it'll catch our attention, even if it comes as a what we call like cold inbound inquiry. But of course, we also get a lot of introductions through founders and angel investors. So there is not one particular path.
Is there a wrong way to do it?
I think the wrong way at the seed stage is to hire an investment banker.
Right.
Nothing against investment bankers as human beings,
Yeah.
but at the seed stage, it's just a bad signal.
Yeah.
And like, just because I guess my pattern matching has been trained by having seen so many pitches that come in from an investment banker that are
Yeah.
completely irrelevant, like Series B companies, Series C, or sectors that we're not interested in.
Yeah.
And so I think it's very rare that we would see a great company coming to us, coming by an investment banker. It's also not needed at this stage, I think. Yeah.
And what should a founder be looking for in an investor?
I mean, I don't know if there's just one generally true answer, because
Yeah.
different people might have different preferences and look for different things. If I was a founder at the seed stage, I would look for a really committed partner. So I would do a lot of due diligence on the investor as well, and find out if this investment is done out of conviction or if it's just a little optionality chip. And I would want to make sure that they really understand the space and have some expertise in that will be helpful, whether that is in team building or go-to-market. So I think in the end it's a lot about personal chemistry as well, because whoever you choose as your investor, you'll most likely work together with them very, very closely for many years. So I think that personal relationship is ultimately maybe the most important factor.
Once you've successfully raised seed capital from point 9, what are the things that you need to do to kind of kick on to Series A?
Yeah. So after we've invested in a company, like after the closing or sometimes even before that, we usually sit together with the founders and create like sort of a master plan. It's maybe, I don't know if it's the right term, but it's like what we call like the master plan to Series A, because Series A is usually the next milestone. Maybe not because it's the ultimate goal in and of itself, but it's usually a goal on that way, like an important milestone. And so we try to come up together with a plan of like, where do we as a company want to be in, let's say, 18 months or 24 months, and kind of then work backwards from there. And that usually leads to a lot of actionable outcomes in terms of the team that you want to build, and maybe like the product that you want to launch, and sales and marketing initiatives to try out, and if they work, to scale. I think from seed to A, it's really about building the right foundation in terms of a product that has strong product market fit, because by the time you want to raise a Series A, you probably need pretty strong signs of product market fit and some early signs of a repeatable sales process. Not the type of proven scalability that you would require at the Series B stage, but Series A investors typically want to see some level of repeatability. Like probably you've already gone beyond just the founder selling, probably made it work with one or two, maybe more AEs, and so that's what we're trying to help founders understand and do. And because we've seen so many seed companies go to this Series A, I think we have a pretty good understanding of how that journey looks like.
Cool. Moving into the quick-ish fire round. Some questions for you, Christoph. So what one thing do you advise your SaaS companies to do that will move the needle the most? I'm sure you advise many things, but is there one thing that they really need to do?
It depends on the stage and obviously on the situation, but if I try to really nail it down to just one thing at the, let's say at the seed stage, at the Series A stage is a bit different. At the seed stage, I think it's really finding your ideal customer profile, your ICP, and not being worried about that being too small. So I think in most cases, it makes sense to narrow down and then maybe narrow down again and then do it again. And even if that means your initial segment is very small, it doesn't really matter because you can expand it later. So I think one of the most frequent mistakes SaaS founders do is try to serve too many customers at the same time, which leads to basically everything that you do in terms of product and product marketing and sales being diluted or being spread around too thin. So I think really nailing that customer segment and saying no to whoever is not in that customer segment, I think it's really important. And then also trying to get as many leads as possible that meet those criteria, because only then you can afford to be so picky. So really nailing down on that ICP, I would say, is what matters the most at the seed stage. And then if you maybe ask for like the number two, or I think what becomes number one after the Series A is hiring and building the management team.
What's the best advice you've ever received?
For me, in my current investor hat, I would say it's probably from one of our LPs, a very very experienced, very successful LP that has invested in much older, much more successful VCs than Point9 is already when we met them for the first time 10 years ago. And I think they kind of told us or encouraged us to not be afraid of the risk, because all their data shows that in the end, the returns are so power law driven. It's kind of easy to look at the math, but it's hard to really understand the impact of that. So I think what we learned from them is that there are no safe bets. Like even if you think this is a relatively safe bet with a maybe 5x upside, usually it means you have less upside, but you still have all the risk. So I think that taught us to really be very much focused on finding companies that have these huge outlier potential.
What's the biggest failure you've made or experienced and lesson learned?
Yeah, so probably hard to pick one. There are lots of failures. We have to make so many decisions that we probably make failures every single day. I think the failures maybe that stand out the most, or the ones that you remember for the longest time, are when you passed at a company and they became super successful. And I think every investor has some in their typically called anti-portfolio. And I definitely remember that we talked to companies like Intercom, like big success out of Dublin, right?
Yeah.
And as well as Pipedrive, and talked there. So we missed some of the most iconic companies that were started in Europe 6 to 12 years ago. And we missed them for different reasons. Like either we didn't even somehow get it why they are special, or we passed on valuation, which is maybe a particularly stupid mistake. So there's a whole range of possibilities how you can mess things up as an investor.
And the final quick fire round sort of question, what do you think is the hardest thing about being a SaaS CEO?
I think I'm curious what answers you get when you actually ask these questions to SaaS CEOs, because I have never been a SaaS CEO, so I have some experience as a consumer CEO. So I guess some of the things just managing a company are probably similar, but I'm curious about the answers from people who are actually SaaS CEOs. I think it's probably the challenge of growing with the requirements that change so drastically and so fast if you scale. I think it's one thing to be the CEO of a slow-growing company that is bootstrapped and maybe grows 30% year over year. That's hard enough, but it's even harder, much harder, to be a CEO of a company that looks totally different every 12 months or every 18 months, because your team size has doubled or tripled, and your ARR has has grown by 3 or 5x year over year, and you have different types of customer sets to look after. So I think it changes so much, like the job description of the person who founds it, and who, like what they need to be good at in the first year is so different from what they need to be good at in year 5, and that's so different from what they have to be good at in year 10. And I think just the learning that and adjusting to that, and maybe doing things that are outside of your comfort zone. Maybe if you started the company, you never wanted to be in meetings all day, but if you are the CEO of a bigger company, that's what you do. I think that's maybe some of the hardest parts.
And you're at SaaStock 2022. What are you looking forward to the most?
Catching up with a lot of people that I haven't seen for a long time, because really meeting in person wasn't possible for almost 1.5 or 2 years. So it's only been like this year that we all got out again to meet people. So great to catch up with people, meet new people who I've never met, and just learn more about what's going on in SaaS in Europe right now. Maybe meet some interesting companies and hopefully also learn from others in some of the presentations here.
And if people want to connect with you after listening to the podcast, how can they reach out to you? What's the best way?
Well, if they happen to be here at the conference, just say hello, I'm around. Other than that, feel free to drop me an email at christoph@point9.com. You'll probably also find me on Twitter and LinkedIn. You'll also find some of my colleagues, so just say hello.
Good stuff. Well, Christoph Janz from Point9 Capital, thank you so much for being a great guest on the SaaS Revolution show today. Enjoy SaaStock 2022.
Thanks so much, Alex.
Thank you very much. Awesome.
Thank you.
Thanks for tuning in to this week's episode of the SaaS Revolution show. I hope you enjoyed it. And if you learned something from it, check out SaaStock.com/events to find all the upcoming SaaStock conferences around the world. Want exclusive SaaS content and actionable insights to grow your SaaS? Join our community of over 36,000 SaaS founders at SaaStock.com.